Welcome, students. Today, on behalf of Adhyapana Academy, we are going to take a short discussion on salary chapter in intermediate. When you say salary, it is one of the most important topic in your intermediate syllabus. So when you say intermediate syllabus, most important topic is salary. That's where you're most questioned about. Apart from the other heads of income, salary and house property plays a very critical role in your examination point of view. So we'll understand salary. We'll first understand the introduction part of it. When you say salary, basically what we are trying to understand is there are three categories in salary that we'll be discussing through. Every heads of income in Income Tax Act will have something called charging section. So what is the charging section? Section 4 of Income Tax says an income can be taxed under this Income Tax Act. So the power is given to the central government to charge income tax on a particular transaction. So not just on the whole Income Tax Act, there must be a charging section in each of the chapters also. So salaries charging section is section 15. So section 15 says a particular income can be charged as salary income. So that is what gives the power to the central government. So section 15 says that salary can be taxed on due basis or payment basis or arrear basis, whichever is earlier. So not just receipt alone, accrual is also taxed. So whichever comes earlier, sometimes even the arrears is taxed at the later point in time when we are receiving. So the chargeability tells you that a salary is taxed whether it is due or paid or arrears basis, depending upon the circumstances. The next section is section 16, which talks about the deductions that a particular employee can claim out of his salaried employee. So what are the deductions he can claim? The first thing is standard deduction. Of course, we all would have an idea about it. So standard deduction is up to 50,000. So your income or 50,000, whichever is lower. So as an employee, whatever income you earn, even if you earn 1 lakh, you can claim up to 50,000. So it's a standard deduction. That's why it's called standard. It's a flat deduction. Then you have entertainment allowance. For certain employees, typically like government employees, they are eligible for deductions under entertainment allowance. So that is the second allowance that we are talking about. Third one is professional tax. So when an employee is engaged in an employment, the employer must remit a tax for employing a person. So for having a person as an employee in an organization, the employer must pay a certain tax to the state government, the local tax authority. So that's called professional tax. So that can also be claimed as deduction. So these are the three deductions eligible under your salary chapter that is covered under section 16. So what are they? Standard deduction, entertainment allowance, and then you have professional tax. So these are the three things. The last section, now we have understood what is salary. That is, salary will be charged to tax. We have understood the charging section. We have understood the deduction section. Now we should know, what do you mean by salary? What are all covered under salary? Are there any specific salaries which are not termed as salary? For example, there are also things like perquisites, which are taxable as salary. Also, in some cases, profits in lieu of salary is also taxable as salary. What is perquisite? Perquisite is some extra benefit given to an employee. So for being an employee in that organization, you are given some extra benefit. It could be a car, it could be a house, it could be a medical treatment, or it could be some education facilities for your children. So all these are covered under perquisite. The third one that we said was profit in lieu of salary. Typically, it is not salary, but it should be treated as salary. So it's like a deemed salary. So that those sections are covered under profit in lieu of salary. So these three forms part of section 17. That is salary under 17 clause 1, perquisites under 17 clause 2, and profit in lieu of salary with respect to 17 clause 3. So these three are what we are calling it as salary things. So before we get into the salary chapter, we need to understand some basic concepts on what do you mean by a relationship of person receiving salary. So what do you mean by the concept of salary? So the basic concept is what we are going to understand. First of all, to receive salary, there must be a concept of employer-employee. So there must be an owner, there must be a person who's working under that owner. So this relationship is very important. And second thing that income tax tries to tell you is that the employment could be full-time or part-time. I am not bothered whether you're coming at morning 9 o'clock, signing off at 6 p.m. in the evening. I don't mind. What I mind is are you employed with me? All that I care is, are you employed in an organization? It is okay that if you're part-time employment. For example, you're working in the first off in a particular organization, in the second off you're doing something else for which you're being paid. So the first off is from employer A, second off is from employer B. It is perfectly fine to have more than one employment. So it is full-time, part-time. So both full-time is also covered, part-time is also covered. And foregoing of salary, we'll see about that. What do you mean by foregoing of salary? Foregoing of salary is like when you're giving up your salary. I don't want my salary. This month's salary, I'm giving it to a trust. Does that amount to your salary? Yes, because it is your salary supposed to be received by you, and then you are giving it to the trust. So this foregoing is also a kind of salary. We'll of course discuss it in detail. Surrender of salary to central government is also a concept which we will discuss. And last 2 points that we are trying to say is salary paid tax free. So it doesn't mean that if you're paid salary and like, for example, persons earning in World Bank gets a salary as it is, there is no tax on it. So it doesn't mean that it is not an income. Even if it is tax free, it is still considered as salary only. So salary paid tax free is also covered under that. Place of accrual. It doesn't matter where the income is accruing. So if you have earned in India, it is taxable in India. So the place of accrual becomes very critical. So the first concept that we are talking about was the employer-employee relationship. So when you want to talk about employer-employee relationship, we said certain things are important, right? That is, there must be an owner, there must be a person employed in that. So some key examples that we can have there is actor, producer. Producer, for example, now a Jailer movie is released. Sun Productions pays Rajinikanth or superstar for acting in that movie. Now, next movie, Rajinikanth will be acting with some other producer. So this actor producer does not have an employer-employee relation. Now, let's say a particular production house employs an actor, says that for next 3 years, you are an employee of my organization. You have to act only in my movies, whatever I am producing. Then there is a relationship. So this employer-employee relationship should exist. That is, that generally doesn't exist in actor-producer. Similarly, a partner firm. Partnership firm and the partners in that firm are not employer-employee because owner takes the characteristics of a partner. So even if you're paying salary to a partner, it doesn't count. It doesn't count as salary because there is no employer-employee relationship. So these are the concepts that we are talking about where the employer-employee relationship does not exist. Actor, producer, and you have this partner firm, partnership firm paying to the partners of the firm. So it is also not salary. Same way, director and a company paying to its director, though director might be part of the organization, managing the whole organization, but still it is not employer-employee unless he is employed. Unless a director is employed in a company, he will not be considered as a employer-employee relationship will not be considered. Same way we said full-time, part-time. Let's take an example. Ramesh works in ARC Private Limited from 8:30 to 12:30, and he works in Car Private Limited from 2 o'clock to even 6:30. Both the salary income will be covered. Similarly, if Suresh works in RM Private Limited for the first part of it, that is April to July, and then subsequently he joins in another employment in GRK Private Limited from August to March, both are considered. So it doesn't matter whether you work in multiple employers or it doesn't matter whether on the same day you're working with multiple employees. It's perfectly fine. So it can be full-time, part-time. So this is the second part section. Situation 2 is full-time, whereas situation 1 is basically part-time and multiple persons. But all these income needs to be considered. We also spoke about foregoing of salary. Let's take an example for that also. Mr. Arun is a software engineer in ARC Private Limited. He is now sending a mail to HR saying that I don't want March month salary. Instead, you pay it to an NGO. So even if he wants to pay to the NGO, what is happening? It is his salary. He might ask them to tell you to pay to someone else, but it is still Arun's salary. So it will be taxable in the hands of Arun, even though if he has asked the employer to pay it to someone else. That doesn't matter. Whether it is due to you, it was due to you, you have asked to pay it to someone else, that doesn't matter. So foregoing of salary is still salary. And next you have surrender of salary. What do you mean by surrender of salary? Central government employees can opt for a scheme called voluntary surrender of salary scheme. So under that scheme, if you are actually surrendering, that salary is exempt. that salary is exempt. That is central government employee surrendering their salary under that particular scheme, voluntary scheme alone is not considered as a salary. That will be exempt. And we also spoke about salary paid tax free. So when you are receiving a salary, tax will not be either charged or tax will be charged and deducted. So what is your salary is not the net. That is not what you receive in your hand. It is salary plus the taxes paid on behalf of you. So for example, if your salary is 50,000 per month and you are having a tax of 12,000 in a year, your employer will deduct you 1,000 per month because it is 12,000 per annum, tax of 12,000 per annum. He will deduct 1,000 out of 50,000. He will give you 49,000, remit 1,000 to the government. So your salary is not 49,000. Your salary is 49,000 plus 1,000 tax. So salary includes the tax. If it is tax free, it is fine. Otherwise, it includes the tax portion also. So it is not the net that is taxed. It is a gross salary that is what is supposed to taxable. Some of the exception is there are certain, we were talking about this perquisites, for example, car or accommodations or something, where car will be given to you. You will be using the car. Whatever tax is applicable for this usage of car will be paid by the employer to the government. Now, this you don't know what is the tax position of that. You don't know how much was tax deducted on that. So that will generally not be a deduction. Automatically, you will use the car. If you're using the car for worth for 10,000, you will use it for 10,000 and he will pay tax on top of 10,000. Your employer will pay tax on top of 10,000. So that is one exception to non-monetary perquisites alone. So that is a case where an employer will bear the taxation. So it will not pass on to the employee. Another part of it that we said is place of accrual of salary. So the place of accrual is irrelevant. So place, for example, if it is paid outside India, moment it is earned in India, that is you have done some work in India. You have worked in Chennai, you are going and settling in US. The Chennai employer is paying to in US, it doesn't matter. So it doesn't matter whether it is paid outside India, but it is for the contract that you have rendered in India. So it is paid for the Indian contract. So that will be considered as your salary. And pension services. Pension services is also always considered to be for services rendered in India. Whatever pension you're earning out of Indian services, wherever you receive, it doesn't matter. Same way, leave salary. Wherever you receive it, doesn't matter. If you have earned that leave salary for the employment that you have carried out in India, it is taxable in India. Pension income doesn't matter wherever you are receiving. What matters is whether it is towards an income, towards an employment that you served in India. Is it for the purpose of employment in India? That is the only thing that needs to be bothered. Nothing else needs to be bothered. So salary paid outside India doesn't matter as long as it is for the services rendered in India. So it is perfectly fine. So that is place of accrual of salary. Next to two concepts that we are talking about was we were talking about section 15, where we said taxability is based on due, receipt, arrear. So what do you mean by due or receipt? Due or receipt, whichever is earlier. For example, now it is August month salary, 31st August. In case it's 31st August, I'm receiving salary before, let's say 2-3 days before August itself. It is perfectly fine. It is still August month salary. So it is taxable on receipt basis. If I'm receiving it later, August month salary received in September 5th, if the due is what comes earlier, it is taxable in the due basis. So it is due or receipt basis, whichever is earlier. Of course, this confusion comes only in the March month salary. When do you receive your March month salary? For rest of the thing, of course, you would have earned it during the year. It will still be taxable. March month salary alone, you might have a confusion whether it is taxed on due basis or receipt basis. What should you keep in mind? You should keep in mind that it is due basis or receipt basis, whichever is earlier. And the next concept is advance and arrear salary. What do you mean by advance and arrear salary? Advance salary, let's say I am in need of money. I tell my employer, give me my September month salary now itself. I will not get it again in September. Give it to me now itself. This is called advance on salary. Since I'm receiving it in advance, that is, I'm receiving it first before the due. September month is what the due is, but I'm receiving it in August itself. It is taxable on receipt basis. Why? Because it is due or receipt, whichever is earlier. So what will be the rate of tax? Whatever is the rate of tax at the time of receipt or at the time of due, whichever is beneficial. So there is a rebate given to him. For example, I am received uh, in March month, I'm receiving April, May, June salary. In March 2023, I'm receiving April, May, June 2023, 3 months salary in advance. Now I've received it first. So since I've received it first, it will be taxable in March. But the tax rates might be different till March, might be different from April to June. So what they say is if there is a difference in taxes, that is, if you're going to pay extra tax because of receiving it first, if you're going to pay extra taxes because of receiving it first, then income tax says, I'll give you a discount, I'll give you a rebate. So what do you mean by discount in income tax? It's a rebate. Just because you're paying higher taxes because of receiving it earlier, I'll give you some rebate. So this is advance salary. So there is a relief provided to you in the form of rebate. And what is advance against salary? Let's say I'm receiving my advance salary. That is, let's say I'm getting my 3 months advance salary, but I am not saying that I will not receive it in April. Whatever salary I'm receiving in advance, I'm saying you adjust it. For example, they're giving me 50,000. I tell my employer, you adjust 5,000 every month for the next 10 months. It's like loan without interest. Advance against salary, it's like a loan without interest. So it's just adjusted over a period. So here the concept of receipt versus due does not arise. The last concept is the arrear salary. So arrear salary is basically taxable on due basis, but it was not possible to give it at that time. For example, government employee, they'll be working. After 3 years, 4 years, they'll get an order saying that for the last 4 years, I'll give you extra salary of this much. So that is called arrear salary. It was supposed to be paid in 2017, but paid in 2023. There is a 6 years gap. So whatever you're receiving it late will be taxable on due basis because you're receiving it now. In case if it is taxed on due basis, if it was paid tax on 2017, then leave it. Otherwise, if you're receiving it in 2023, which was not taxed on due basis, then what do? You tax it in 2023 and claim relief. So this is called arrear salary. So these are the concepts that are important for salary chapter as far as section 15 goes, section 17 goes, section 16 goes. So we have understood the basic concepts of three sections. So with this, we now have a good understanding on the basic salary introduction. Thank you.